the odds aren't good that we're going to see the light and that voters are going to put up with the kind of monetary reset that it would take and all that. It's a really difficult process, but the least painful way is some kind of monetary reset where we go back to some semblance of the gold standard. But doing that impoverishes everybody who owns a lot of dollars. So that's the problem with going back to a gold standard, is that every citizen with a bunch of dollars under the mattress or in a bank account or a bunch of government bonds in their retirement fund, they lose out big time. A monetary reset and a gold standard back to, say, $10,000 gold, which is to say the dollar is 1/10,000th of an ounce of gold, that makes your bond funds 2/3 less valuable. And we'll have to see what people do when that happens. Most of them won't be happy.
Hey everyone, my name is Anthony Fatsis and welcome to another episode of the WTFinance podcast. On this podcast, I have the pleasure of welcoming back John Rubino. So John, thanks so much for coming back on the podcast.
Hey Anthony, good to talk to you again.
Yeah, looking forward to the conversation. It's been probably over a year, potentially longer since we last spoke. So I'd be really interested in hearing just your over outlook of what you're seeing in the economy and markets currently and what you're watching.
Yeah, this has been an eventful year by any measure. There's so much going on right now and so many cross currents that I don't think you can, define a major trend in the world right now, because the tech bubble led by AI has just absolutely expanded beyond anyone's expectations and beyond any other bubble, tech or otherwise, in history. So we're looking at that. The global financial system depends on the U.S. The U.S. economy depends on the stock market, and the stock market is basically being supported by maybe 10 AI-related stocks. So if they tank, everything else tanks, and today they're tanking. So, we could be heading into that kind of a new environment. And at the same time, you've got commodities over the past couple of years starting to develop a new bull market because. In part because of tech. Tech is using a lot of copper and silver and rare earths and many other things that I can't pronounce. And that's leading to a new bull market that is threatening to replace the financial asset bull market that's going on right now. So just so many things happening. And then gold and silver have had epic runs, and today they're tanking, possibly because there's at least a rumor and maybe an actual official announcement that Russia and the U.S. are negotiating a new partnership in which, we'll stop being enemies and start cooperating, and Russia will go back to using the dollar, which is threatening to the whole BRICS movement. So, and that's just announced today. So we have no idea what the details are. So anyhow, all of that is happening and more right now. So there's absolutely no way to predict short-term trends in this kind of a world.
Yeah, it definitely does seem, as you said, so much happening, so hard to predict the near term, especially when people can just come out, say something, and it tanks or sort of skyrockets the market. But so do you see, you mentioned AI, you mentioned, I guess, tech bubbles. It just seems to be keep going and going and going. So is that something that you think is potentially near term going to reverse, or do you think it's more longer term, it's just unsustainable? How are you looking at that?
Well, the way the dot-com bubble worked was it got massively overinflated. Then there was a huge crash. And a lot of the major companies in that space went down by 90% or more, if not 100% in a lot of cases. But the internet went on to dominate the world. So I think it's probably the same thing with AI. These AI stocks are they're being elevated by extreme optimism about what new products and services they can bring out with their AIs and how much money people are willing to pay for it and everything. Highly unlikely that most of them end up making the kind of money they need to justify their current valuations. So, AI is obviously going to be incredibly consequential and, might spell the end of the human race. Who knows? We'll find out in the next decade. But that doesn't mean all the companies in that space, or even most of the companies, are going to do well in the future. And if a few of the bigger players don't do well, then that'll crash that section of the market, along with a lot of other sectors. So I think that's probable. That we have some kind of a massive repricing in the AI space that is catastrophic for some of the companies there, but that AI goes on to be a very, very big deal in the future. So, the short-term risk in all of that is that AI tanking pulls down the rest of the stock market, which pulls down the economy. We get a big recession. That whole thing is very, very possible. Again, if you look back at the dot-com bubble, it burst in 2000. We had a massive recession for the next 2 years. Very possible that something like that happens again.
Yeah, and I guess you look at it, what we've seen recently as well is that AI could actually be the destroyer of value through, everyone's saying it could destroy all SaaS companies and all these things. So it does seem that markets are very frothy, which, as you said, potentially could mean that we're coming to the end.
Yeah. This has been a really long bull market, maybe the longest on record, because we really emerged from the Great Recession bear market in maybe 2012, so maybe 2011. So it's been 15 solid years of an equities bull market, and that's way too long. Valuations get grossly out of whack when you go on that long, and you need a major repricing to bring things back into balance. So I think that's the kind of thing that's completely possible in the next couple of years.
Yeah, okay, definitely seems to be the case. But as you said, in the long term, they're probably still going to be amazing companies. It's just, or whichever one's last, I guess they're going to probably still have that value.
The survivors have the potential to be very big over the next decade. But of course, we really don't know what AI is going to do. Already they're talking about 90% unemployment in a growing number of sectors because AI is evolving into AGI, artificial general intelligence, which by definition means that AI is as smart or smarter than humans in a wide range of subjects. So let that happen, and then it's hard to predict what that means for the economy because you've got these companies attracting huge amounts of capital, which is healthy for the stock market at least. But you've also got a lot of other sectors losing out in a massive way to AI and having to fire a lot of their people. Amazon just fired, I don't have the number, I don't remember, I think it's something like 12,000 people. But it wasn't warehouse staff, it was corporate staff. So, and they attributed it to AI being able to do a lot of what mid-level managers currently do. And that's the whole AI thing. Give it a few more years. And the Amazon experience with mid-level managers is going to be spread all the way across the economy, leading to just layoffs on a scale that has never been seen before. And that's one more wild card out there among a lot of wild cards. And we really don't know how it's going to play out. Nobody does. Even the guys running the AIs are just giving probabilities now, 40% this, 60% that, 10% maybe this other thing, and nobody really knows. So this is one of the trickier stretches of human history, just in general, and doubly so in the financial markets.
Yeah, it's going to be interesting to see. So another thing we've seen is obviously, as you mentioned, precious metals that has massively gone up over the past 3-4 years. It's definitely been in a bit of a super cycle. So what do you see as the major driver of that? Has that been these BRICS countries moving away from the US dollar? Has it just been, very undervalued over the past few years? How do you look at it?
All of that. We started an experiment in 1971 in which we left the last vestiges of the gold standard and basically gave every major country an unlimited credit card in the form of a monetary printing press. Humans being what we are, they abuse that privilege massively. Almost every major country is now really deeply in debt, and they have no choice but to create a lot of new currency to manage their debts. And that's impacting the value of the currencies, which in turn is impacting the value of gold and silver when priced in those currencies. Because, if your government is actively inflating away your currency, we've had 3,000 years of experience with that. And what happens every single time is that people move their capital into real money like gold and silver and other real assets like farmland and energy assets, things like that. That spikes the prices of those things in the local currency. And leads to the collapse of the local currency at some point. So that's called a crack-up boom in the Austrian School of Economics. And what I think is happening with gold and silver now is that we are in the early to mid stages of a crack-up boom. And that's leading capital to pour out of financial assets and fiat currencies and into real things. And gold and silver are the big beneficiaries of that. So regardless of what's happening today with Russia and everything, I think gold and silver are what will continue to be beneficiaries of this longer trend that is only going to end with a monetary reset. So we're going to stay on this course until the decline in the major currencies becomes so unmanageable that the major governments of the world start seeing a return to the gold standard or some other kind of monetary reset as the least bad option. And I think we're not that far from that because the decline in these currencies, as measured by gold and silver going up, is accelerating. And it's going to lead to extreme instability unless somebody does something pretty soon.
Yeah, and what would they have to do? Because I guess if we look at, it seems like ages ago now, and obviously it was never going to work. Doge came in to try and resolve this, and that was a failure. So can this issue be resolved, or do you think it's impossible?
Well, they can't resolve it through cutting spending. We've already tried that a few times in recent history. That it's called austerity, where you cut back government programs and then people get less from the government. The citizens of countries who try that instantly rebel, kick those people out of office, and install people who are willing to give lots of free stuff to the people that put them in place. So we're not going to cut spending. Doge was destined to fail from day one. And we're going to continue to increase government spending going forward and create new currency to manage the increase in the amount of debt that we're talking about. And that goes on until the value of the currencies really start to fall off the table. And, we saw what happened in 2022 when in the US we had official inflation. In other words, the dollar dropped by an official amount of almost 10% in 1 year. And for a lot of people, it was 20 or 30% in their cost of living increase. And when you see something like that, it's traumatizing. So that's another reason that money is flowing into gold and silver, because enough people drew the correct conclusion from 2022, which is that we're in big financial trouble. We need to get out of the financial system however we can. And so now we're pursuing the same policies that led to that burst of inflation, only we're doing it on an even bigger scale. So it won't be long before inflation picks back up again, which is to say the value of currencies starts to fall in a disorderly way. And then the game ends. The fiat currency experiment, which started in 1971, will finally end. And hopefully it'll end with a monetary reset that puts us back on a sustainable, organic growth path. Or it'll end with a gigantic financial crisis like Weimar Germany, where over the course of just a couple of years, everybody gives up on the currency. Its value falls by, 100% because it's replaced by another currency. That's also possible. So we'll just have to see just how dumb the guys in charge of the system are right now, because we know they're reasonably stupid. But are they suicidally stupid enough to just let this thing run until it blows up on its own before they intervene?
Yeah, well, I guess, there are a few people who aren't as stupid. You'd say Scott Bessent, and he seems to understand the issues. It's just, can he convince others what is need to be done to resolve it?
Well, yeah, you can have the chairman of the Fed or the Treasury Secretary or somebody like that who has good ideas, but you cannot sell those ideas politically because they constitute austerity. They take from big chunks of the electorate in ways that the electorate won't put up with. So yeah, Scott Bessent can think anything he wants to about gold, but unless he can talk Trump into going back to the gold standard or something similar, some other plan that has the same goals and the vaguely same framework, then it doesn't matter what he thinks, because we have this institutional momentum now where government spending is going up and borrowing is going up, and the interest on the debt that we take on to cover today's deficit and debt goes into next year's deficit. So we get this feedback loop in which interest on the debt increases next year's deficit, which increases the debt even more, which increases the interest on the debt even more. And so that's kind of a death spiral that we're in right now. And there is no political fix for that in today's world. Unless Trump is willing to do extreme things, and he succeeds with some of them. So it's possible that he's the only personality type, somebody who's just willing to roll the dice and to put up with whatever the consequences are. He might be the only kind of person who can go from where we are now to a gold standard without some kind of a gigantic crisis. So, here's hoping, because that's really our only hope to avoid an absolutely epic financial catastrophe.
And then that's probably the only way you could actually get that political will is through, problems. And I guess that's what's happened in Argentina. It took ages, and that's probably what's happened in other countries as well, where there's only so much people take until they realize this isn't the right way. Let's make a shift.
Yeah. It mostly takes a collapse, and maybe we'll be smarter than that, or I don't know what, but the odds aren't good that we're going to see the light and that voters are going to put up with the kind of monetary reset that it would take and all that. It's a really difficult process, but the least painful way is some kind of monetary reset where we go back to some semblance of the gold standard. But doing that impoverishes everybody who owns a lot of dollars. So that's the problem with going back to a gold standard, is that every citizen with a bunch of dollars under the mattress or in a bank account or a bunch of government bonds in their retirement fund, they lose out big time. A monetary reset and a gold standard back to, say, $10,000 gold, which is to say the dollar is 1/10,000th of an ounce of gold, that makes your bond funds 2/3 less valuable. And we'll have to see what people do when that happens. Most of them won't be happy. And then comes a period of civil unrest that we have to get through intact. So we'll see. Very messy. Own lots of gold and silver, and you personally will come through it in pretty good shape.
Yeah, really interesting. So you mentioned obviously gold and silver has been a common theme. It seems to be a way to sort of hopefully avoid these issues. Do you see the current trend continuing, or we obviously had a massive blow off top, and then we mentioned today it's sort of gone down. It's gone down. Been very volatile the past few days. So how are you currently seeing the market?
Well, gold and silver and most other commodities will go up as long as we're on the current track. As long as by we, I mean most of the major countries of the world are borrowing way too much money because we're overspending. And then the interest on the debt that we're accumulating goes up, which leads to higher debt next year. As long as that process is going on, then you want to own gold and silver, because some of the capital that is thrown off by all that borrowing and soaring debt, et cetera, that's going to flow into real assets. And you're seeing it now around the world, where central banks are now the biggest buyers of gold. And right up there with central banks, there is at least one crypto company, Tether, which is buying central bank levels amount of gold in order to create meme coins, or no, it's not meme coins. Stable coins. Sorry, to create stable coins, which is another way for gold to circulate in the financial market. And if you've got crypto money and central bank money at your back, as gold and silver do right now, then that's a pretty powerful tailwind. That's the kind of thing that almost guarantees your price goes up. And so far, that's what we've seen, that the central banks are buying regularly without being very price sensitive. They have a target in terms of tons rather than dollar value or anything, and they're continuing to buy gold. And Tether and the other crypto guys recognize that gold works really well for their purposes too. It's an asset that you can put into a vault and that you can tokenize and have it trade on a blockchain. And somewhere along the line, you make a lot of money in that process. So as long as you've got those guys out there doing what they're doing and not being very price sensitive about it, then gold and silver will tend to see a lot of buying pressure and continue to go up. So I think it continues to be a really good market for precious metals. And it's getting volatile now, which is going to shake out a lot of the non-gold bug money that's flown into it lately. Because over the past year or so, you've seen a lot of generalists start to view silver in particular as an asset that they can speculate in, and as something that they can buy in the expectation that it's only going to go up forever. A lot of those guys would be shaken out if silver dropped back down to $40 an ounce or something, which it absolutely could. Bull markets have, by their nature, really brutal corrections. And so you really have to understand what it is you're buying to maintain confidence in something if it drops by 50%. That's what a lot of the real stars in the precious metal space, and in investing in general, have kind of a variation of a saying that goes something like this: you shouldn't buy something unless you'd be comfortable with it dropping by 50%. Because if you're comfortable with it dropping by 50%, that means you understand it well enough to know what its true value is, and it's higher than the price after it drops by 50%. So you would be buying more at that point rather than freaking out and selling everything. So when you have volatility like we're having now in precious metals, excuse me, it tends to shake the weak hands out, people who don't really understand why they're there. And the buyers from the weak hands tend to be strong hands, people who do understand what they're doing and who have no intention of selling at the price where they're buying right now. So I think that kind of a consolidation is reasonable for precious metals, especially silver, because they've had such great runs. So you don't get the great run like that without a big consolidation and lots of corrections and things. And today, that's one of the things we're seeing.
Yeah, and I think what we saw with silver at one point, it had higher sort of ETF or volumes into its ETF than the S&P ETF. So it did seem to be massively speculative, especially when it had that final sort of blow off top. And as you're saying, a lot of that seems to be reversing now.
Yeah, I mean, this is a lot of fun for gold bugs and stackers, people who have been at this for a while and have no intention of bailing. So they're just watching all this action with interest, because it's fun after the past decade of obscurity for silver, for instance, to become a hot asset. It's the next Bitcoin. That people are saying that out there sometimes. And if you've been stacking silver for 10 years or 20 years or 30 years, then this is entertainment, but it really means nothing to you in terms of trading strategy. You're holding on until this resolves itself in some way. And the resolution is that monetary reset we talked about, or some kind of absolutely parabolic spike in silver where, you've got analysts out there now talking about $500 silver. And if that were to happen, then okay, if you've been stacking for 30 years and it's gone, your average price was 25 and now it's 500, you might be tempted to sell. But for most of these guys, it's going to take something like that. It's going to take some kind of a really extreme resolution before the strongest hands in this space start selling. And I think that's the right way to approach it. Wait till the undeniable blow off happens before you think about cashing out or whatever.
Yeah, and I think we've seen that the actual physical commodities is sort of being sold at a discount because there's just as you said, a lot of people are trying to probably cash in, and there's just too much demand for the buyers.
Well, the markets are, they're set up in ways that are, first of all, ripe for manipulation, especially in the silver market, and second of all, designed to benefit people who like to speculate in silver futures contracts rather than people who actually want to do something with actual silver. And new physical markets have become established. They've grown up as a response to that, because paper speculators, when they dominate the price in something, the price is bizarre. It doesn't bear any relation to actual intrinsic value. So China, for one, set up a physical market where people who actually want to use silver for something can go in and buy by bulk. They can buy lots of physical silver and then go off and make their electric cars or their solar panels or whatever. And that's starting to dominate pricing. As you said, there's a big gap between the paper price right now and the physical price. And that creates an arbitrage where you can buy with a futures contract on the COMEX in the West, collect that silver, take it over to the Shanghai Metals Exchange, and sell it for a higher price. The fact that that's happening, but it's not happening on a scale big enough to close that gap, implies that there isn't enough physical silver available in the paper markets to satisfy the physical demand on the Shanghai exchange. And if that's the case, then that means that physical is now calling the tune here. And that it almost doesn't matter what happens in the paper markets anymore, because the guys who dictate the price are the electric car makers and the solar panel makers and the military industrial complex that is churning out missiles and things that include silver. And it goes on and on. There are a lot of industrial uses for silver, and those are the guys who are now setting the price. And if that's the case, we're in a deep deficit with silver, where we don't produce enough to satisfy the industrial and the investment demand. So the price has to go up from here to allocate the available amounts of silver. And that's great for the stackers and the other people who have been loading up on silver and the mining stocks and everything going forward. It's great. It's really great for the miners, because their costs aren't really going up that much, but the price of what they're selling is going up, which really widens their profit margins and gives them massive new cash flow. And so one thing that's interesting right now, if you want to learn a little bit more about silver and get more plugged into it, start looking at the miners' earnings reports, which are coming out now, starting soon, and running through the month after that. You're going to see the gold and silver miners produce earnings reports for the fourth quarter of 2025, in which they show massive increases in the price of gold and silver and a massive widening of their profit margins and a big increase in cash flow, which is the definition of a healthy company. When your profit margins are widening and your cash flow is growing, you're a really good company, the kind of stock that people want to own. So what we'll see in the coming year is the miners making a lot of extra money and then using that money to improve themselves. They'll pay off their debts, they'll increase their dividend, they'll buy back more shares. And the smartest of them will make really well thought out acquisitions, not just empire building things where they buy at random to get bigger, but transformational acquisitions where they'll buy either an exploration company that has potentially a tier 1 asset, or a junior miner that has proven that it can produce at an acceptable cost on a big scale. That also moves the needle for a big miner. Those kinds of acquisitions turn good large producers into great producers, and we'll see a few of those too. And the people who own those stocks will make a lot of money. So that's a play for the year ahead that involves getting to know the big miners in this space and figuring out who's who. But potentially it has a huge payoff at the end of it.
Yeah, okay. Look, it makes a lot of sense. So, John, thanks so much for your time today. We sort of covered quite a lot over this short period. But my last question is, what is one message you want people to take away from our conversation?
Well, I would say don't get wrapped up in the squiggles, the up and down activity in a lot of these, especially in commodities. We're seeing huge moves in gold and silver, and some volatility in the rest of the commodity space. And don't let that become the reality of commodities for you. Think about supply and demand over the long term, and think, for instance, how much copper we're going to need in the next 10 years if AI companies are actually going to build out their data centers the way they think they're going to. Well, it's a massive increase in copper. And that's going to drive the price up. So what copper does, or what silver does, or what gold does in the short run is irrelevant. Look at long-term supply and demand trends, and then allocate your capital accordingly. And in a lot of cases in commodities, the supply demand situation is dire for the users of these metals, because there just isn't enough of it. And if there's not enough of it, then the panic buying that ensues will drive the price way up. So that's an investment thesis that everybody can be part of, and we should be looking at seriously right now.
Yeah, perfect. Great message. So, thanks so much. If anyone wanted to find out more about your work and what you do, where would the best place for that be?
Well, I'm at rubino.substack.com, and I have a newsletter there that basically looks for actionable advice on the things that we talked about. And it turns out there is a lot of actionable things we can do right now.
Perfect. I'll put that in the description below. But thanks again for your time.
Thanks, Anthony.
Hey everyone, thank you for listening. I really appreciate the support. If you've got value out of this, I'd really appreciate it if you could like, subscribe, or comment, good or bad feedback. I'm always open to that. But it really helps with the channel. As I said before, only about 14% of people actually subscribe to this channel. So if you were to that, it would really help. It could mean we could continue to grow. If not, thanks for watching, and see you on the next show. And you also might like this video right here. All right, thanks again.